The uncertainty about the Fed and what's happening with interest rates in 2025 continues. Real estate expert Rick Sadle with Keller Williams Realty and SadleRealEstate.com is with us. Rick, good morning.
Hey, good morning.
So we talked about the Fed and the overnight lending rates, the range here quite a bit, and it's time to take another look. What were a lot of people thinking about interest rates heading into the holiday period? And then now what is the outlook here in the first quarter of 2025?
Yeah. It's fascinating watching the minute by minute data, right? Going into the holidays, we expected the Fed to be making, 2 to 4 interest rate cuts this year, right? Which also meant we expected mortgage rates to trend down. Now, after the latest jobs report, which came in much stronger than expected, there's some concern the Fed rates cuts will slow down this year. And some people are even worried that we won't have any rate cuts at all. Here's the thing, though. Every report is just that. It's one report. And some people think that the last report was skewed because of the strong holiday season. A lot of those job creations came in the form of temporary holiday work. Yet mortgage rates crept up at the thought of a strong labor market, right? Then we have the latest CPI report, which just came out, and it came in a little less hot than expected, and mortgage rates trended down immediately. Now, if the labor market continues to show strong trends for the rest of this year, it might be the Fed rate cuts will slow down or pause. But ultimately, the Fed is looking for just that. They're looking for trends, not individual reports.
Got it. So if the Fed decides not to cut rates at all this year and mortgage rates actually do not come down, how do you expect the Portland housing market to react?
Well, let's take the first part of that. First of all, I do suspect mortgage rates will trend down even if there are no Fed rate cuts. And so the thing is, we have to remember the Fed cut a full percentage point off the overnight lending rate before the end of last year, and yet the mortgage rates trended up. So we haven't even seen the effects of that last set of rate cuts from the Fed. But even if they don't cut rates and if mortgage rates don't come down, I still believe a lot of buyers are coming back to our market, right? Interest rates feel high right now because that's what we've gotten used to, right? 3 and 4% interest rates. But historically, 6.5% to 7% isn't that high. I think a lot of buyers just can't wait anymore. That combined with the wage growth we've had is helping affordability. I think a lot of my buyers, like I said, are coming back to the market. And we have some pent-up buyer demand.
Yeah. Do you think there's a small amount of buyers and sellers who will stay on the sidelines strictly based on mortgage rates?
Well, I actually think a lot of them do for a while. But ultimately, like we've talked about ad nauseum, people buy and sell when life circumstances dictate. We have the 3 Ds, right? Death, divorce, and debt. Also, we have job changes, family formations. Buying and selling is rarely just a financial decision. So while they may wait a little while, ultimately they're forced to live their life.
Yep. All right, Rick, excellent information. Thank you again.
Yeah, thanks.
That is Rick Sadle, real estate expert with Keller Williams Realty and SadleRealEstate.com.